Hey, what's going on, guys? This is Brandon, your trusted realtor, and I'm coming to you with another great episode. We're going to be talking to you today about an analysis of Q2 2020, and we're going to be doing a year-over-year evaluation of how the market is changing or performing here in DC. Not only based on what we're seeing on as it relates to data, but also what we're seeing in the market based on my stories and conversations with other real estate agents here in the real estate industry and in my brokerage office. I've written an article about the same subject, and of course, as always, I'm going to include it, which is loaded with tons of information for you to follow. It should be no question in our mind that 2020 is a historical marker. Why a historical marker? Well, much like any kind of event that is memorable, polarizing, traumatic, etc., you will always remember what you were doing, where you were, and the situations around COVID-19 when that's mentioned. And it is no one should ever underestimate the impact that this one particular event, specifically this pandemic, has had on the mortgage market and the real estate market around us. So much in our environment has changed, and so many realizations and blinders, if you will, have come off of a lot of individuals that are in this environment. Now, you'll probably say, hey, you've talked about this before, and this is almost like beating a dead horse, but we're recapping the market and the things that have taken place. So we saw not only a shift in the overall market dynamics, but we saw a real slowdown in buyers and sellers entering the market at the initial onset of the pandemic. From there, we began to see record numbers of months where individuals were buying and selling properties in the market. And even with those record numbers of individuals who have entered the market, there is still a significant reduction in the amount of available inventory for us to choose from. But regardless of that, individuals are still here in the market purchasing properties. And ideally for sellers, outside of having a conversation about buying a home and being in the right position to buy a home sellers are really licking their fingers from all of the different offers that are on the table. Now, I would personally tell you that I am myself a little bit frustrated, because even though I don't sound like it in my voice, because no matter how many clients you're working with, I'm finding that my average time to work with a client is extended because it is so difficult to actually win a offer. Why is it so difficult to win an offer? Great question, you back there. Thanks for listening. It is so difficult to win an offer in today's environment because people are doing everything. They're throwing the baby out with the bathwater. They're getting rid of the appraisal contingency. They're getting rid of the home inspection contingency. They're getting rid of financing contingency. And to add insult to injury, they're bidding above closing costs, or they're bidding above the asking price or the list price. And so we're not just talking $5,000 or $10,000. And if you remember in an earlier market analysis that I did in the beginning of the year, about 2000, the end of I guess when I started this series in March, of the different geographic counties, you'll note that I talked about a $1,000 or $2,000 or $5,000 earnest money or seller concession that was offered. In today's market, no one's really offering or even paying attention to seller concessions because everyone needs and has realized the advantage of being in a house before, like my last video, winter comes. Before we get in a place that they have to endure another 3 or 4 months of winter. And realistically, in this DC region, we always find that winter can typically roll over into as long as into March. That puts us, if we start in the end of August, or September, almost 6 months really of winter or cold season, and especially 6 months of darker days than anything. People want to escape that. They want to have their own reprieve, and they are hitting the market hard. How hard are they hitting the market? Well, based on some conversations I'm having in my office, we're finding that at certain price points, when individuals at the $1 million price point, they're coming in and they're bidding upwards to $50,000 above the asking price and higher. In some situations, there's been reports and in conversations, agents and I have been talking about some clients that have bid almost $100,000 above the asking price for a property. Now, in this case, you would ask yourself, what is the logic there? Because in that particular situation, you're more than likely, A, not going to see a situation where the property appraises for $100,000 above the value, and B, those individuals probably aren't going to be saving money. But as I always say, in this situation, you have to ask, is the juice worth the squeeze? And here, it very well might be. If you consider the long-term projection of your tenure here in the district, if you want to stay in this area, you find that year over year, historical values have shown, at least since 2010, that home prices continue to increase in a positive trajectory. Even during the 2007 and 2009 mortgage crisis, you find that this geographic region was adversely impacted from a price appreciation or value standpoint very little. The outlier areas like Prince George's County and those individuals that bought those mega mansions really found themselves in tough situations because they had artificially high values for their property. The more that you live in the district, and again, this will go to a consumer sentiment of whether I want to live west of the river or east of the river. It don't really matter. As long as you live in the district and your address says Washington, D.C., regardless of the zip code, that property, I wager $1, is going to appreciate at some point in time or another. And the article that I just wrote, which I'll leave a link to, shows in the scatter plot that the vast majority of properties have seen and continue to see an appreciation, and those properties are mostly, not all, but east of the or west of the river. Those properties that are west of the river are not only seeing continued appreciation in their value, but those properties that are west of the river have not only seen an increase in their value, but they've also seen an increase in the median home price. What is the value of that statistic, the median home price? You're paying attention. The median home price actually is a really valuable measure on really getting to understand where property values are and how they are functioning in the area. The median home price in DC right now is closer to $630,000. You'll find in the scatter plot that I put together in the article that the vast majority of those zip codes where the median price is $630,000 and higher, you find that those zip codes are west of the river. So really, what does that say? It says a few things. That A, the starting point or the entry point for most properties at this point in time with the market and the dynamics is going to be closer to or north of $600,000. Anything that you want that's that's going to be less than that or in that mid-range, or what I consider to be affordable or tolerable living, you will find east of the river. And it's actually funny because as I was writing the article and preparing myself mentally for this video and to make it, I got a phone call from a client, and in that conversation, I found it all too telling. That conversation devolved down to it that I've been renting in a certain area and I don't feel that I'm necessarily priced out from a rent standpoint, but if I'm going to be paying so much in rent, I should be looking at the opportunity to buy a property. And the person that I'm currently house splinting or renting, or the tenancy where I currently am, this person owns a house and is income producing for them. I want to be able to potentially put myself in that same situation, but I don't want to leave a certain ward. Well, I found that conversation to all be too telling because the name of the game is timing. And if your timing was not right, then you may not be in a situation where you can reap the benefits of living in the place or this part of DC that you want to live in. Or if you are willing to or able to live in that area, remember for the price point that you're at, you have to be willing to make certain exceptions. That means going back to some of my other videos, either finding a property that needs some TLC and using a 203K or some type of conventional rehabilitation loan in order to get that property to meet your needs. Or doing something, living into the property and house hacking, getting a property and then renting out rooms or multiple rooms in that property to people so that way you can help to afford for the value. But again, there's risks associated with that, and those are all things that you have to take into consider to determine, again, whether or not for you the juice is worth the squeeze. Another statistic to think about and to keep in mind is that the average sales price for a property in DC is $751,000, nearly $752,000. And again, those sale prices represent a 6% increase in some, just generally in value for individuals who are already owners in their property. Now, by and large, that's not going to be true for everyone, because I did say that there are certain zip codes that experience negative year-over-year change in the median sale price. The metric that I find to be really helpful is the percentage of the original price that was paid for a home. What does that specifically mean? That means if the price was listed for $100,000, how often or what percent of the time that people actually pay $100,000 for the price? Now, you'll find that this particular statistic is the most telling as it relates to both the volatility in the market, especially when you pair that against the overall volume of homes that have sold or homes that are currently on the market, the active inventory against properties that have already sold. Here, when you look at properties and the percentage of the original price that was paid for the second quarter of 2020, we find that 98.8% of the time individuals paid the list price for a property. There are some instances in many communities, and again, the analysis that I provide in my article will show this in a little bit more detail, area that was telling to me when I began to look at each zip code specifically. I noticed when doing an evaluation of the zip codes that the 2006 zip code, which is the Foggy Bottom area, experienced a very odd phenomenon. In this particular phenomenon, an individual sold a property for $138,000, which is significantly less than the median average in that area, or at least traditionally and historically what I've seen the median average is for that area or for properties in that area. So I found that to be jarring and telling, but what that did tell me, at least, is that there is some volatility in the data, and that would otherwise show to me, without doing some initial analysis, that there are more individuals that are paying more than or higher than the list price for a property. All of this information in mind and in hand, it presents you with an extremely powerful opportunity to envision and to see more clearly what the market is doing here in DC. Continue to make sure you like, subscribe, and hit that notification bell so that way you can stay tuned in and in tune to the latest and greatest to come as it relates to videos and information. I'll leave more links and resources down below so that way you can access that. And remember, there's going to be more to come as it relates to Montgomery or Maryland and the great state of Prince George's County as it relates to market statistics and the Commonwealth of Virginia. So remember, I'm your trusted realtor. Stay tuned in and in tune. Look forward to being your resource for all of your real estate needs. Take care.